Hello and welcome back to Pesa Forever channel. If there is one investment story that has completely dominated 2025, it is not the Sensex, it is not the Nifty, and surprisingly, it is not even gold. It is the incredible record-breaking run of silver. We're talking about a metal that was once considered just a traditional purchase for festivals like Dhanteras, suddenly delivering returns that have left every other asset class in the dust. The numbers are frankly staggering. We're seeing triple-digit gains, and Indian investors who parked their money in silver ETFs at the start of the year are sitting on massive profits right now. To help us decode this phenomenon, understand the math behind these returns, and most importantly, tell us if silver is really heading towards rupees 3 lakh per kg in 2026, we have our resident market expert with us today. Welcome back to the studio.
It is fantastic to be here, and you're absolutely right. 2025 will go down in history books as the year silver truly woke up. We often talk about bull markets in equities, but what we witnessed in the white metal this year was something else entirely. It was like a coiled spring that finally snapped loose.
It certainly feels that way. I was looking at the data before we started and I had to double check my screen. We're seeing returns that look like they belong to a volatile small cap stock, not a stable precious metal. Can we start there? Just how much money did silver actually make for Indian investors in 2025 compared to other assets?
The numbers are breathtaking. If you look at the calendar year 2025 so far, silver ETFs in India have offered an average return of roughly 127.31%. To put that into perspective, let's compare it to the Nifty 50. In 2025, the Nifty had a relatively slow year, rising only about 8 to 9%. So silver outperformed the Indian stock market benchmark by more than 10 times. Specifically, if we look at the top performers, the UTI Silver ETF offered the highest return of around 130.02%. Following close behind, the SBI Silver ETF Fund of Funds gave about 129.46%. These are triple-digit gains that have completely overshadowed even gold, which gave solid returns of around 75–80%, but nothing compared to this explosion in silver.
That is unbelievable. 130% in a single year. That essentially means if someone invested rupees 1 lakh in January, it would be worth more than 2.3 lakhs today. But this begs the question, why now? Silver has been a part of Indian culture forever. Why did 2025 become the year it suddenly decided to sprint like this? Is this just speculation, or is there something real happening behind the scenes?
It is definitely not just speculation. Experts are calling this a perfect storm of policy, supply constraints, and industrial demand. You have to understand that silver is unique. It wears two hats. It is a precious metal like gold, which we buy for safety during weddings or festivals, but it is also an industrial metal. And right now, the industrial side is driving the bus. We're seeing what we call a structural deficit. 2025 marks the fifth consecutive year where the global demand for silver has exceeded the supply. We are short by about 230 million ounces globally.
Wait, we're short by hundreds of millions of ounces. How does that happen? Aren't we mining more?
That's the tricky part. We cannot just flip a switch and mine more silver. About 70–80% of the world's silver comes as a byproduct of mining other metals like zinc, lead, and copper. So miners are not digging specifically for silver. They get silver while they are digging for other things. This makes the supply inelastic. Even if the price shoots up to rupees 2,50,000 per kg, miners cannot immediately ramp up production because their main business is zinc or copper. And while supply is stuck, demand is skyrocketing because of the green energy transition.
You mentioned green energy. I keep hearing that solar panels are a big part of this story, especially with India's push for renewable energy. Is that really moving the needle that much?
It is the single biggest driver. Silver is the best conductor of electricity on Earth. You can't build a modern solar panel without it. And the technology is changing. The new generation of solar cells, called TOPCon cells, require 50% more silver than the older models. Global solar capacity is growing at double digits, and it's projected that solar manufacturing alone will consume over 200 million ounces of silver annually by the end of 2026. In India specifically, the government is pushing hard to increase solar capacity, which is expected to drive domestic demand significantly, potentially consuming over 150 tons of silver just for our own solar projects.
So the solar rooftop schemes and large solar parks we see coming up are directly fueling silver prices. But I also heard about artificial intelligence playing a role. I didn't realize AI had anything to do with silver prices.
It is a new and powerful factor. AI requires massive data centers and high-performance semiconductors. These chips and servers need to be incredibly reliable and efficient, and because silver is such a superior conductor, it is essential for the connectors and circuitry in these high-tech environments. So, you have solar, you have EVs, and now you have the AI infrastructure boom, all demanding more silver at the exact same time that inventories in global hubs like London are plunging.
That explains the demand side perfectly. But I read something concerning about China recently, something about export restrictions. How does that factor into the 2026 outlook for us in India?
This is perhaps the most disruptive catalyst for 2026. Effective January 1, 2026, China is implementing strict new export restrictions on refined silver. China controls a huge portion, roughly 60 to 70% of the world's refined silver. Under these new rules, only large state-approved companies with verified credit lines over $30 million are allowed to export. This effectively blocks hundreds of smaller exporters who used to supply the global market. It's a strategic move. China wants to secure that silver for its own solar and EV industries, essentially weaponizing the supply.
That sounds like a recipe for even higher prices. So for an investor listening to this who feels like they missed the boat in 2025, the obvious question is, how do they get in now? In the old days, our parents would just go to the family jeweler and buy silver anklets, silverware or coins. Is that still the way to go?
If you're investing for profit, absolutely not. Buying physical silver from a jeweler is actually one of the least efficient ways to invest today. When you buy jewelry or even coins, you're paying making charges that can range from 5 to 15%. That's money you lose the moment you walk out of the shop. Plus, you have the headache of storage. If you buy a few kilos of silver, and remember, at rupees 2 lakh a kilo, that's a significant amount of metal. You need a safe or a bank locker, which costs money. And when you try to sell it back, the jeweler might question the purity or offer you a lower buyback rate.
So, if physical silver is inefficient, what is the smart alternative? I assume you're going to talk about these ETFs we mentioned earlier.
Exactly. Silver ETFs or exchange-traded funds have revolutionized this market for Indian investors. Think of it like digital silver. You buy units on the NSE or BSE just like you buy shares of a company. Each unit is backed by physical silver of 99.9% purity stored in a secure vault. You don't have to worry about theft, you don't pay making charges, and the liquidity is fantastic. You can sell it instantly during market hours.
That sounds much better. But what about people who don't have a demat account? Many of our viewers prefer mutual funds. Can they still participate?
Yes, they can. For them, the best route is a silver fund of funds or a silver mutual fund. You can invest in these through a standard SIP just like you do for your equity mutual funds. It is very convenient for long-term investors who want to stagger their entry. You don't need a trading account and you can start with very small amounts, sometimes as low as rupees 500.
Now I have to ask about taxation. I know the government changed some rules in the budget regarding capital gains. Does investing in an ETF have any tax benefits over buying physical bars?
This is a crucial point that many investors overlook. The budget really tipped the scales in favor of financial instruments like ETFs. Here's the math. If you buy physical silver bars or coins, you have to hold them for at least 24 months to qualify for long-term capital gains tax. But if you buy a listed silver ETF, the holding period for long-term capital gains is only 12 months.
That's a huge difference. So if I hold an ETF for just 1 year and 1 day, I get the long-term benefit?
Precisely, and the rate is flat 12.5% without indexation benefits. If you sell before 12 months, it is added to your income and taxed at your slab rate. But that 12-month threshold for ETFs versus 24-month threshold for physical metal makes ETFs far more attractive for anyone looking at a medium-term horizon. It gives you flexibility.
That's a clear win for ETFs. Let's shift our gaze to the future. 2025 gave us returns of over 125%. What does 2026 look like? I'm seeing headlines about silver touching $100 per ounce globally. In Indian terms, are we looking at rupees 3 lakh per kg? Is that a realistic target?
It is the big question everyone is asking. The market is currently divided between the optimists and the realists. On the retail side, there is huge optimism. Surveys show that over half of retail traders believe silver will cross that psychological $100 mark in 2026. In Indian rupee terms, with the current exchange rates and import duties, $100 per ounce roughly translates to a domestic price of somewhere between rupees 2.8 lakh to 3.2 lakh rupees per kg.
3 lakh rupees per kg? That is a massive jump from the current levels of around 2 lakh rupees. Who is predicting this?
Several institutions are bullish. For instance, Riddhi Siddhi Bullions predicts a range of rupees 2.8 lakh to 3.2 lakh per kg by year-end 2026, assuming stable currency levels and continued supply tightness. Motilal Oswal has also suggested that silver could test rupees 2.4 lakh per kilogram during the 2026 cycle if the rupee depreciates further and global deficits widen. Even global giants like Goldman Sachs are looking at a range of $85 to $100 per ounce, which supports these high domestic targets.
So the experts are bullish, but surely trees do not grow to the sky. What are the risks? What could go wrong for silver in 2026?
You're right to be cautious. Silver is notoriously volatile. We often say it is like gold on steroids. It swings hard. One major risk is what we call thrifting. When the price of silver gets too high, manufacturers start trying to use less of it. They might engineer solar panels that use copper instead, or just thinner layers of silver. If prices stay above rupees 2.5 lakh per kg for too long, that substitution effect could kick in and cap the demand. Also, we have to watch the global economy. If we see a recession or an industrial slowdown, the demand for electronics and cars drops and silver prices will tumble with them.
So it is not a one-way street. There is also this concept I keep hearing about called the gold to silver ratio. Can you explain that in simple terms? What is it telling us about 2026?
The gold to silver ratio simply tells you how many ounces of silver it takes to buy 1 ounce of gold. Historically, this is a great indicator of value. When the ratio is high, say above 80, it means silver is cheap compared to gold. When it drops below 60, silver is getting expensive. Right now, analysts expect this ratio to compress further, possibly heading down toward 40. If that happens, it means silver will continue to outperform gold significantly. It's a strong signal that the white metal has more room to run relative to its yellow cousin.
That is fascinating. So putting it all together for our audience, we have structural shortages, a green energy boom led by solar, and favorable tax rules for ETFs in India. But we also have high volatility and the risk of substitution. What is the final verdict for a common investor? How much of their portfolio should be in silver?
The consensus among financial planners is to treat silver as a satellite holding, not your core investment. Because of the volatility, remember it can swing 2 to 3 times harder than gold. You should limit your allocation to about 5 to 10% of your total portfolio. For conservative investors, maybe just 2 to 5% is enough to give you a hedge against inflation without keeping you awake at night.
And what about entering the market now? Since prices are hovering around 2 lakh rupees per kg, should they wait for a dip?
Absolutely. Don't jump in with a lump sum right now. The smart money approach is to use systematic investment plans, or SIPs, or staggered buying. Buy a little bit every month. This smoothens out your purchase price. And for those who are sitting on those massive 130% gains from 2025, it is wise to book some profits. Experts advise locking in maybe 25 to 33% of your gains. Take that money off the table, rebalance your portfolio, and let the rest ride the wave into 2026.
That sounds like very sound, practical advice. Lock in some wins, but stay invested for the long term because the structural story, the solar power, the AI, the supply deficit is not going away anytime soon.
Exactly. The fundamentals for 2026 remain materially intact. Whether it hits the magical 3 lakh mark or settles around 2.5 lakh, silver is going to be a critical asset class. It has transitioned from just being a precious metal to becoming a strategic mineral for the future of the planet.
A strategic mineral for the future. I like that description. It really changes how we look at those silver coins we buy for Diwali. Thank you so much for breaking this down for us. It's been an eye-opening discussion.
My pleasure. It's going to be an exciting year ahead for commodities.
Indeed, and to our viewers, remember, while the shine of silver is blindingly bright right now, always invest according to your own risk appetite. Do your research, consider the ETFs for tax efficiency, and don't get carried away by the hype. We'll be back soon with more updates on the markets. Until then, happy investing!